What's up, YouTube? Welcome back to Telly's Valley Investing. It's your boy Telly, and I am excited about what I'm going to be talking about today. So let's get right into it. Well, before I say anything about the topic today, I want to encourage you guys to go back to my previous video and watch that video on the perfect swing trade. I give an example with GEVO, GEVO, and there's a lot to learn in that video, so I encourage you guys to go back and watch that. So today I'm going to be talking about scaling your entry into a full position. All right, since I used GEVO as my example in the previous video, I'm going to go ahead and use that again in this video today. So here we go. Here's the chart for GEVO. The first thing I do when I make up my mind that I am going to invest in a stock is I go to key statistics. There are various ways to find this information. You know, this is Webull right here, and on the mobile app, if you go to the code section, that would pop right up, and you'll be able to see these key statistics right here. Right now I'm on the desktop version of it, and once you type in the symbol name like I did, it should pop up on here on the lower right side of your screen. So right here, the first thing I look at is the 52-week high and the 52-week low. Okay, so right now if I'm trying to invest in GEVO right now, and the price is currently at $6.80, and I see that the 52-week high is at $15.57, and the low is at 46 cents. I know that there is a major gap to fill from $6.80 to $15.57. So this, in my opinion, is a good entry, you know, just based off of that. But to better solidify my entry, I'd love to use right here the 3-month and 5-month low. So here, if you go here, click on the 3-month chart, boom, right there, you would see the highs and the lows of the stock for the past 3 months. Okay, so here, current price, again, 680. Lowest part of the 3 months, 673. So again, you can see that the price is pretty much at the bottom of what it has been for the past 3 months. Go back to the 5-month chart. On here, look at the bottom. Same thing. 674. 674 is the bottom, right? And then current price 678. So you can, based off of these readings right here, you can go out there and, you know, you can scale your entry, and you can go full of what you have to determine to invest. Or say you are not sure that the price would not hold this level, you can put 50% or 40% and then wait till the next drop, and then put the rest of your position in there. But you know, like I said earlier, 3-month, 5-month chart, perfect. You find a low, if it's close to it, you go full position in there. All right, so if you're watching this and you're saying to yourself, well, okay, now I get it, I should place my entry in at the bottom of the 3-month chart or 5-month chart. What if when I find it, it's not at the bottom of the chart? Well, what I'm going to say is, you know, you need to have a plan. You need to have a trading plan. And if you get there late, I would say if you're late is like a day after everybody else has found it, I'd say probably put in 10%, 10 to 20% of what you were originally going to put in there, and wait for the next couple of days to see the price action. Now, if it goes down more, you put the rest of your position in there. If it doesn't, now you know you have to average up. With that being said, there's some things you have to watch out for. When good news comes out about a company, there's a tendency that people buy the news. Okay, people buy more shares when the good news comes out, and majority of those people are not value investors. Majority of them are day traders. So day traders buy and sell the same day or the next day. So you gotta remember that even though the price might be going up really fast that day the news came out, it's most likely gonna drop again when all those day traders get out. So that's something to look out for. You don't want to jump into full position, at a higher price when you can get it for a lot cheaper. So I love to be very patient with my entries. If I find it and it's way above the 3-month low or the 5-month low, or it's just sitting right at the 1-year high, I just go ahead and put in like maybe 10% of my position in that. I put 10%, and then I watch the entry the next day. Let the sellers get out, let the flippers get out, and then I start scaling my entries, keep averaging down, depending on how long the contract or whatever you're expecting from that company, depending on how long it is required for that news to materialize into the value reflecting in the price per share. That will determine how much time you have to average down. Sometimes some companies release some news and it's going to materialize in a couple of weeks, so you don't have much time to average down. Sometimes it doesn't even go down. Sometimes the price just keeps going up, so you just have to watch the price action, and just if you do that consistently, you would make more money, because you might you might miss out on a certain amount the first couple of times you do it, but in the long run you would make so much more money because you're being patient. You're watching and you're letting the flippers get out. There's a lot of people that buy on the news at a high price, and because they're day traders, they're impatient, they sell at a loss, because when people buy any company shares, the price is gonna go up, and when they sell, it's gonna go down. So as a value investor, when you're buying for a projected value, you have to think about that some people are buying right now to take their money out today or tomorrow morning. So having that in the back of your mind, that okay, I'm gonna have a chance, since I came in a little late, I'm gonna have a chance to buy at a cheaper price tomorrow or the next couple of days. For something like Gevo, that had that contract for if you watch my previous video, Gevo had the contract that was going to materialize through years. In my opinion, it's still materializing. Okay, so I bought that stock at 65 cents. If I had got to that late and it was already at $1.23 or $1.25, I would have put in just a little bit of my position in there, maybe like 20% or 30%. And just like it happened with Gevo, right after I bought it, it went up $1.23, and then the next couple of weeks, it dropped back down to about 88 cents. Okay, so whoever found it at $1.23, if they had waited a couple more weeks, they would have got to buy it at 83 cents. Hence, they get to make more money in the long run. But I had that much time with Gevo because the contract was a long one. It's materializing for a long time. So those are the things you have to consider when you're scaling your entry into a stock. When you're thinking about the price and are you going to make more or make less. So 3 month chart, 5 month chart, check the bottom, check the high, check the 52-week high and low. Make sure you're buying closer to the bottom. If you don't think it's gonna drop all the way back to the bottom of the chart, that's okay. Just be patient. Scale your entries in. As the time goes on, and just slowly grow your position in that stock. And when you do that, in the long run, you would make so much more money. So I hope that was helpful for you guys today. Again, I encourage you guys, go back and watch my first video on this on GIVO, the perfect swing trade. There's a lot of information on there, and I hope this channel is really helping you guys. Make sure you subscribe, turn your notifications on, like this video. Feel free to ask any questions in the comments. I'll respond to them as fast as I can, and I look forward to getting to know you guys some more. Again, thank you for watching Taylor's Value Investing. God bless you, and have a great weekend.